Daniel asks, "Hi Matt, I buy single-family homes for rental in California and Florida with my self-directed IRA through Equity Trust. I want to get loans on the real estate so I can leverage and buy more real estate, but it seems like there are a few banks that loan to IRAs. The bank that I found, NASB, requires 45% equity, but I would prefer 30% equity. They also charge a higher than normal interest rate for the non-recourse loan. Do you know of any banks that will allow for 30% equity in California and Florida?"
Daniel, thanks for the question. So anytime that you are taking out a non-recourse loan, and by non-recourse, I mean a loan that is going to be secured exclusively against the property, that you're not also going to be personally liable for, a situation where the lender cannot pursue you personally for recourse, cannot have access to other assets, that sort of stuff. Anytime you're taking out a non-recourse loan, it is considered by the lender to be a much higher risk proposition for that reason, right? And so they are going to charge you more money for that. They're going to require more money down. They're going to charge you a higher interest rate. They're going to charge you more origination points and that sort of stuff. Now, those are all different types of profit centers and risk mitigation, centers for them. So there's possible that you could negotiate on, say, you could pay more money up front for a lower interest rate, right? You could buy down the interest rate. It might be possible to negotiate on down payment if you were to offer them something else. A lot of the times, though, as you mentioned, these are standard terms. I do know of some lenders that'll do 35% down if you're doing at least 2 properties with them and stuff. But those obviously are also, certainly the interest rates are higher and the origination fees are higher than a conventional loan for sure. And so, the other thing that I would say to you, though, it sounds like you're investing primarily in California and Florida. Those are 2 states where I've lived for about 7 years in each one of those states. And, one of the things that I can tell you is that those states are 2 of the most challenging states in the country to get a positive cash flow on your real estate investment. And so one of the things that you could do is to think about, investing and diversifying a little bit into some higher cash flow margin states. And that way, you'd maybe be able to use the non-recourse financing in a more cash flow advantaged market, and thereby, even with the higher interest rate and the points and everything else, still get, positive cash flow on your properties and still get a particular type of performance. So, you may want to think about some of that.